Hello, everyone. Very nice to be with you and to talk with you about investing in women on International Women's Day and into the Women's History Month. I was just reading in the journal this morning that one of our women from the past is actually responsible for women's studies. Which was really wonderful, and a balanced approach. So you can be career, but validating and celebrating the fact that women who were homemakers and ran the family actually were also very valuable. So Sarah is her first name, and she has Hall, I believe. Maybe it's Sarah Hall. Anyway, an historical figure I was not aware of. So it's nice to be doing this presentation in this month and on this day. And with that, let me share my screen with the presentation. And I think I'm supposed to go to view and full screen mode. And here we are. Okay. So the angel capital and venture capital markets, status of women entrepreneurs. My firm, Golden Seeds, is one of the largest angel investment groups operating in the United States. We back exclusively women entrepreneurs. And before I get into Golden Seeds, which is number 3 here on the table of contents, I'm going to back up and give you an introduction to the angel capital market and what's happening in the market overall in supporting women entrepreneurs with capital, so that you have some context. And then after I finish, we'll have just a few food for further thought. That's a little closer. So introduction to the angel capital market. It's a 25 billion annual market, rather large. And there are 335,000 angel investors in the US. And of that large number, 30% are women. That number of women angel investors has been rising over the years. When my firm Golden Seed started in 2005, women angels were around 3% of total angel investors, and today they're 30%. And we're going to see a very significant correlation between the percentage of women angels and the percentage of women who are getting angel capital. So it's a $25 billion market. Women are getting more capital, as I said, than they were. So 3% in 2004 and 30% in 2020, and that was the same percentage in 2021. And as I said, we're going to see that there's a very significant correlation between those on the investing end of the table and those on the receiving or issuing end of the table. Now, angel investors invested 25 billion, venture capital, which we hear a lot about, 154 billion. And that was again in 2021. It used to be, and we'll see that in a few slides, that the markets were about even in the total amount of dollars given out. But in the last few years, you hear about the series, Uber getting huge financings. You hear about unicorns. That's in the venture capital market. And the combined, we can all do the math, but the combined market between angels and venture capitalists is just under 190 billion. That was an increase of 31% or 31 billion from 2019. So it's quite impressive, given that 2020 was a pandemic year. Angel investments, on the other hand, increased only 6% to 25 billion, while VC investments increased from 78 billion in 2017 to 154 billion in 2020. And the mega deals, I mentioned Uber, we all know that name, and others in the venture capital market account for the huge increase. So in 2020, there were 327 venture capital deals of 100 million or greater, accounting for 76 billion of that 154 billion in investment. Those are big numbers. It's almost half the total. So just 327 deals were almost half the total. And you can see the number of companies funded by VCs was 10,862, and the number of companies funded by angels was 64,480. So, it is a tale of two markets. The average deal size, you see 14 million for VCs and 390,000 for angels. So angels are early. We get these companies going, they turn over the motor, and the VCs come in. Again, 335,000 angels and just under 2,000 venture capital with funds. The unicorns, we know value, and unicorns, the definition, at least in this market, is companies valued at over $1 billion. So when they get the investment, they are valued at over $1 billion. That's a unicorn. It's accounting for a big percentage of the growth. You see, the bar chart, where in 2011, VCs were 33.8 billion. So just under 34 billion of total investment, kind of, is in the same zip code as angels. So they broke away as the years went by, and in particular, starting in 2014. Just under 210,000 companies applied for angel funding in 2020. So 210,000 applied, and about 30% of them got funding. So about 64,000 that you see on the chart on the right, or the bar on the right. So 210,000 applied, 30% or 65,000 got funding. And it's approximately the same percentage as 2019, as you can see. The angel-backed ventures are all over the United States. You can see the biggies, California with Silicon Valley, New York with 10.25%, Southeast, a larger geographic area, but of course, Florida's included. And the one that has seen increases in the last few years is the Great Lakes region. But California, New York, Texas, in terms of just a single state, and then you have the region, Southeast, coming up, but I don't think has yet seen the impact of the growing tech scene in Tampa Bay or Miami. The areas, the industries that angels invest in are comparable to what VCs invest in. So heavy on the tech, heavy on the healthcare. And that's what this chart shows us. So medical, healthcare, health tech, biotech, some of the leading industries that the dollars are going to. Now let's talk about access to capital by women entrepreneurs. So overall market, again, a $25 billion market, 64,500 companies got funded by angels. Venture capital, 154 billion in 2020, and 10,000 companies got funded. So average deal size angels, 390,000, average deal size venture, 14 million. Lots of unicorns in venture, does not exist in angel. Okay, where do we find women in these markets? Both of them, angels and venture. So let's start by talking about why it matters. I think those of us on this call are predisposed to agreeing that it matters, but we're following the research, and the research says what it says. A company with strong representation of women on boards delivered 25% more ROE than companies with lower representation. And in this particular case, the source is Caliber Impact Capital. The research is done by McKinsey, CSFB, Dow Jones. Women in leadership positions, return on assets almost 13 times higher for companies in the top quartile of women in leadership positions. And women-founded businesses delivered 2.5 times higher revenue per dollar invested than those funded by all-male teams. So these are impressive statistics, and you would think that those dollars would be following. And let's talk a little bit about.
Can I ask a question here?
Yes.
Before we move forward, because I'll forget.
Yeah. Yes, of course. Please do. Who's that, Mercy?
In the previous slide,
yes,
the third note there, that women, that one, women-funded business, 2.5% higher revenue per dollar invested. Do we know why? I'm sure it's a lot of
what we have found, yes, what we have found at Golden Seeds, and our requirement is that there is one woman in the C-suite with appropriate equity. And what we found is that having even one woman in the C-suite drives diversity in the leadership and in the company. So just one woman drives diversity. So we're not talking about all women teams. We're talking about diverse teams. So that's why.
Excellent. Thank you.
And the participation by women in business creation is substantial. They are now 42% of all businesses in the US, compared to 29%, 14 years ago, 15 years ago. So it's rising, and lots of business creation. 1,800 every day. And women-owned businesses grew their revenue by 3.9% overall for the same period, compared to only 1.7% for all businesses. And that period is 2014 to 2019. So I know I'm throwing a lot of statistics out, but it's, context for you. One thing is women who seek angel and venture capital. Not all women do. This is women businesses generally. Women-owned businesses employed over 9 million people, and that those employee roles also grew by 8% since 2014. And apparently more than 4 times the annual growth rate for all businesses in the same period. So women are putting the numbers on the board, whether they're funded by angels and venture or they're not. And this will be all businesses where a woman is in the capital. Now we get to CEOs of angel funded companies, and you'll see the 29% female and 71% male. So this is consistent with what we saw earlier, that 30% of the applicants who receive funding from angels are women. And that has been rising over the years. just under 210,000 applied, as we know. 2/3 or 138,000 were led by male teams of applicants. So 210,000 total applications, 138,000 were led by male teams, and 68,000 by women. So, you know, almost twice. So 1/3, 2/3. Got to get those numbers up. Got to get the women to apply. But the numbers are nevertheless growing in the right direction. So in 2011, you see that the proportion of companies seeking angel capital that were owned by women was 12%, and today it's 1/3. So, you know, we are improving, and we think it is because there's more women, you know, on the investing side. So, and here's our chart showing that correlation that I referred to earlier. The yield rate for women getting capital who sought capital is slightly behind that of men who applied for capital and got capital, but we're improving. It's 28% for women and 32% for men. And women angels, 98,731 women in this country making angel investments. So more than doubled over the last 10 years, as we can see. Okay, so it was more like 45%. Sorry, 45,000 in 2011, and we're up to 98,731. So that's encouraging because we know that there is a correlation between women angels and women getting funded. And the percentage of women-led startups also doubled. So we can see that correlation manifesting as we cut the numbers here. There are 262, so out of the 335,000 angels estimated in this country, there are 262 firms, groups that are members of what is called the Angel Capital Association. And that's a great resource. My firm, Golden Seeds, is a member. And when I look at, you know, those firms, which are members of the Angel Capital Association, which have a focus on investing in women founders, you find 12. Now, interestingly, Golden Seeds is one of those 12, of course. We're the only angel investment group in the top 10, not talking about women, just generally, and in terms of dollars and number of deals. So we are serious about making investments, and we ranked 3rd last year. Bell Capital, which I know Beth knows. And the angel market is a very collaborative market. We are trying to get capital to entrepreneurs who we think are worthy. And normally you're going to have, normally you'll have definitely more than one angel group in any given deal. You're going to have, it depends on the size of the round, a handful or 2 handfuls. Angels, the total size of a funding on any given deal is generally, we saw the average is 390,000. My firm, we will enter where it's a company is raising $1 million to $5 million. So again, the broad average is 390,000, but $1 million to $5 million is more what you're going to see, $1 million to $3 million. So you're going to have several angels in the picture. Here, the average pre-money valuation, and here's the opportunity. women-led ventures, even though we saw how the performance is very good relative to male-led ventures, you see the average pre-money valuation is lower significantly for women-led ventures than for male-led ventures. What does average pre-money valuation mean? It means when you invest in the company, the entrepreneur is going to say, look, I believe my company is valued at X. In this case, you see 6.8 million. And therefore you're investing on the basis of that valuation. And after you invest, you add your investment dollars to come up with a post-money valuation. So pre-money valuation is something that angel investors look closely at, anybody, venture capitalists look closely at, because you're looking to exit at a much higher valuation. So male-led ventures, average pre-money valuation, 9.6 million, and female-led ventures, 6.8 million. So when you're investing, would you rather buy a stock at a lower price or a higher price? A lower price. And you want to sell it at the higher price. So it's an opportunity. The amount of capital that women get, this is an repeated refrain, a complaint that women are, when women entrepreneurs are starved for capital, they don't have enough capital, so they need to do more with less. Thus, what we saw earlier, they generate 2.5 times the revenue for $1 of investment. Necessity is the mother of invention. You find a way. But the average round size for women-led ventures, 1.5 million, and for male-led, 2 million. The progress made by venture capitalists in funding women entrepreneurs, unlike the angels, has been very slow. So that dark red bar is all male founders, and that's the total value of VC deals by gender. So we saw that VCs invested 154 billion. So here we have the dark red line is all male founders. The rose little bar that's under 20 billion is at least one female founder, so mixed gender. And all female founders, you can barely see it, but it's that brown little bar on the far right. And it's gotten larger. You could really not see it in 2010 because it wasn't there. 2011, a little bit, 13. All right, so we're making progress, but slow. In 2020, women founded companies received 2.2% of all VC funding. And mixed gender, when including founding teams that are mixed gender, the percentage was 14%. So 86% of VC funded companies were founded by all male teams. Okay, so VC funded companies were founded by all male teams. That's also a mouthful. Okay, so progress has been slow, despite what the performance would otherwise suggest. We saw the correlation: women angel investors, women founders, 30%, 30% in 2020. So let's look at the VC world, and this is number of deals, and it tells the same story at the top. What we do find is that 5% of all VCs have a woman on their investment committee. So, sorry, let's say this another way. Only 5% of all VCs on investment committees controlling the dollars are women. And there's another 10% of women in the VC industry, but they don't control the purse. So their chief marketing officer, general counsel. So we're talking women in the VC market who are on the investment committee, 5%. Okay, of all VCs on the investment committee are women. So that's, you know, if we're persuaded by what happened with the angel investment market, it would suggest that same thing needs to happen in the VC market. Let's look at the equity gap for employees. One of the reasons and one of the missions of Golden Seeds is to build wealth for women entrepreneurs and frankly for women angels. So we pay very close attention to equality, equity in ownership. So you have a C-suite position, but we also insist that you have appropriate equity. Here, and this is Carta, which is used by many for record keeping. Owning equity in a successful company can make a material impact on your financial well-being. You know, so we want women to create wealth. Carta looked at 6,000 venture-backed companies and 180,000 employees. And this is what they found. Women represent 35% of the total equity holders in the companies, but own just 23% of the equity in those companies. So they're in number, they're 35%, but in value, 23%. And women own less equity, largely because much of the equity goes to founders where women lack representation. So this is how this carries through and has an impact. The circling back to the number of women in VCs, again, you can see that you've got the percentage of women partners, but they're not on investment committees. That's where it matters, when you control the dollars. Sorry. Keeps wanting to skip ahead. Oh, doesn't want to go back. Come on. Okay. And this is another illustration of a point that I made earlier. So the startups founded by women get less investment, but create more revenue. So this is that 2.5 times shown. Let's talk about a few female-led unicorns. They exist, actually. We've all heard of Bumble, you know, that dating site that went public. Blackstone made an investment in them. Rent the Runway. Vimeo, the payments app. The DNA testing company 23andMe. Modern Health, BlockFi, Clearco, Figs, TalkDesk, Hims, Nubank. Some of the names are more recognizable than others. There aren't many, but they do exist, and we need to see more. So with that backdrop, again, strong correlation between women angel investors and women getting capital. VC market has been dominated in the last few years by unicorns and financings over 100 million. So kind of going more into the private equity market, whereas the angel investment market is kind of stuck to its knitting. Just funding those companies that are starting and need to have a start. And those unicorns that I mentioned, Bumble, Vimeo, they started with angels. And so if we don't start more women-led companies and owned companies, they don't get to the VC dollars. And as we saw, we probably need to see a significant movement of more women on investment committees at VC firms to move that needle. It's we can go through all the anti-bias training we want to. It needs to happen. So a little introduction to Golden Seeds. We are celebrated 17 years last year, so we're in our 18th year, and we like to say 17 years of vision, grit, inspiration, and determination. So it's been some ride, and we did have some very nice exits last year. And another thing that I'm proud of that I will talk to you briefly about at the end. So we're a leader in the industry, and we back women. So we're a leader overall in the industry, and we back women. And so I believe that we have paved the way for, this little thing is going crazy on me, for more angels to pay attention to the opportunity. The opportunity. It's not a problem, it's an opportunity. We're one of the largest and most active. As you saw, we've invested 160 million in over 220 companies in those 17 years. And as I said, the angels are a collaborative market. After angel, those companies will get VC funding. And that 160 million had a multiplier of almost 10 times. So the 160 that we invested in led to over $1.5 billion for those companies as they went through their funding cycles, and with us in our fundings as well. So it's a nice way to get capital to women. There's many reasons why investors are drawn to invest in women entrepreneurs. Level the playing field, like we said, give them a fair shot. Many people do believe the research that all organizations are better if they're gender diverse, and then seeking superior financial results. And we saw a little bit of that, and that gender diversity produces better financial results. So you'll just have a hard investor who's looking for returns, and if it comes from gender diversity, great. And again, there are others that feel more like, hey, it's the right thing to do because it's the right thing to do. So we both get capital to our companies, and we provide extensive support for operating success and exit. So we have 325 members who come with great backgrounds in business or the medical field, technology, and we all work together and support each other's deals through deal teams and sharing our knowledge, sharing our contacts. So it's more than just writing a check. It's what happens, after that. So we're a network. We have 3 main operating units. So the network, and we have sector groups. So a group of people, I just mentioned, we come from various backgrounds. We have people with expertise in B2B technology, in healthcare, and B2B consumer, or B2C, otherwise known as consumer, working to support our due diligence on any given opportunity. We have a knowledge institute, and we provide training about angel investing. It's a 7-part curriculum. We just added 3 modules, and those are industry modules. So industry being the technology, healthcare, and the consumer. And otherwise, the 4 modules are an introduction to angel investing. We teach about cap tables and term sheets. We teach due diligence. I teach that class. And then finally, board and governance. What is it to be on a board of an early stage company? It's not easy. And, driving to exit. And then we do have funds. I'm a partner in one of the funds. And this year we created another kind of fund that we call an annual fund. It's going to invest over a 12 to 15 month period only, and it'll be in deals that come through the network, and it'll be subject to a vote by those who opted in. And about a third of our members opted in, and others just invest deal by deal. We are nationwide. We have 8 active chapters, and the large dots are where we have active chapters, and the smaller dots is where we have other members. And we have 3 locations: Boston, New York, and Silicon Valley, where we have full screenings and forum presentations. And today with Zoom, people dial into any one that they want. We have about 800 opportunities that come through the system in any given year, and approximately 300 would go through a full process. And last year, new companies represented about 21, which was great, about double what it normally is. And then we also do what's called follow-on investments. So you did the Series A, now you're going to do the Series B, which would be another 20 type of company. So very active. We keep our director of finance very busy. And we do have men and women investors. I mean, we have, I should say, women and men investors. Men represent about 15–20% of our membership. And as we said, we believe in diversity, not talking about all male teams. Here's a nice busy slide for you. I don't know that you would recognize any of the names, but our current investments are concentrated in 74 companies, and they range from tech, hardware, software, digital businesses, business analytics, AI-powered businesses, clean tech, healthcare devices, therapeutics, financial, consumer businesses. We often serve on the boards of our companies, and we have held over 100 board and board observer seats in our companies, and 90% of those 100 were filled by women from Golden Seats. I'm going to talk very briefly about a few of these. 2021 was a big year for exits in the market and for us. And I'll highlight 3 of these companies. Brandwatch on the top right, Little Passports and Bento Box. So Brandwatch is a digital consumer intelligence and social media listening platform, sold to Cision, another sold to a strategic for $450 million in June of last year. Little Passports, award-winning education company focused on early learning, started by 2 women out of eBay, and acquired by, again, a strategic called Begin in December. So just a couple of months ago. Great exit for us and for those entrepreneurs. And then finally, Bento Box, great story. Can you imagine? Bento Box's business is a digital marketing and commerce platform provider for restaurants. In the pandemic, I think there was a little problem with restaurants. Well, the woman founder and CEO found a way to adapt, to pivot, and it was acquired by a strategic, Fiserv, in October 2021, and was a great exit. I mean, really impressive. So women are doing great things, as we saw in the earlier slide, generally. And we also saw the most IPOs in our history. We've had a few here and there, but we had 3 in 2021, all in healthcare, which, you know, with everything else, has been challenged in the market. But these IPOs are very interesting. Cognition Therapeutics, I have to mention, it's a drug development company focused on small molecule therapeutics to treat neurodegenerative diseases, notably Alzheimer's. They're in phase 2B clinical studies. They completed a public offering in October. Renovo RX, a biopharma company and innovator in targeted cancer therapy. Specifically, women composition different from men, weight, height, you name it. Renovo RX developed therapies to be more customized to the patient. And they went public in September of last year. And finally, Tivic Health, founded again by a woman, medical device company focused on sinus and nasal inflammation. So if anybody suffers from allergies and sinus problems and you take Flonase, this is a device that was developed by this woman and her team that goes under the eye. It's a very specific vibration that clears your sinuses. I don't happen to suffer from sinus problems, but if I did, I would be running to get that. She has done, Jennifer Ernst, a fabulous job. She goes to the Consumer Electronics Show every year. She's gotten more awards almost than Heinz has pickles. So they've done a great job and completed a public offering in November. And then notable funding rounds. I mentioned briefly, we follow the company. You do the Series A, you do the Series B. Angels start the company. Venture capital funds the continued growth of the company. So this is what we mean by funding rounds. The valuations that these companies got were very significant. So when we look at our mark, so to speak, XYZ company, we invested at this valuation. I spoke briefly about the pre-money valuation. For women, it's lower, 6.8 million. For men teams, it's 9.6 million. So you're always looking at the valuation of the next financing because your dilution, your ownership will be diluted less if the company has achieved growth and milestones and is valued higher than when you invested. So just two of these companies, Lark Technologies, digital health company that provides virtual care through artificial intelligence coaching, smart devices, and telemonitoring. They raised 55 million in a Series C round in October 2020, and they raised 100 million in a Series D round in September 21. So getting into VC kind of numbers. And Golden Seeds was one of the angels that got them started. And then Meadalese, interesting company, started by a man and a woman, provides artificial intelligence leasing assistant for multifamily real estate industry. So instead of the phone, they developed an AI software that the real estate owners of multifamily housing love. And they raised 25 million in a Series B in July 2021 at 3 times the price of their last raise. So those are nice numbers, definitely on the right path. I'm going to now, before I get to the last slide, which is food for thought, I want to share another slide, and it's a message that came in at 10:15, I think it was last night. And it's a different kind of success story. And let's hope that I have it. I have it here. Here it is. Okay, so I'm going to share this. Okay. And let's see, can I get this to go up? You can see it? This slide? Okay. So let me just read a little bit. We invested in a company called Sisu Global Health. And as you can see, they are focused on designing and deploying medical devices for use in low resource settings. They started in sub-Saharan Africa. Well, there's another place today that has that is a low resource setting. It's a new low resource setting, and that's Ukraine. So their product, which is called Hemofuse, reduces the need for donor blood by enabling surgeons to capture and reuse a patient's own blood. And, you know, it has obvious benefits. Last Tuesday, a group of Golden Seeds investors urged the company to move with urgency to serve Ukraine. So this is one of the ways I said, you know, we don't just write the check, we're involved in helping these companies. So to find the right deployment partner and channels on the ground in Ukraine, find a 501c3 organization to raise donations to at least cover their costs, and prepare to ship at least 1,000 devices for the crisis. And they're now ready. So they're looking to raise 110,000 in tax-deductible donations through Finca International to get their product to Ukrainian hospitals and emergency treatment sites with the right partners. So we believe that you know, our coaching and guidance was pivotal to this moment. Just another way that outside of the, you know, the dollars and cents, that we're trying to make a difference, helping women to contribute and serve in the ways that they uniquely can. And now let me go to.
Wait, I have to say, let's just take a pause here. First of all, it's 5:59.
Yeah.
We have an hour, so it ends in a minute. But oh my God, Kathryn, what an example, and what a current example of what they're doing. That is like phenomenal. I just had to take a minute, so that everybody can like take this in, what Kathryn's talking about. And this is another thing I wonder, because you know, people have been asking how they can help with Ukraine and whatever. I wonder if this is a way to help, and maybe
it is.
Circulate it.
I'll send this around. Yeah.
And so maybe so we can give it to Tanya to circulate to the whole membership and say, here's, wow, really cool. Sorry. Now we're at
No, thank you. Yeah, thank you. You know, it came in, like I said, at 10:30 last night. But you know, it was a way that, you know, one of our companies could be responsive to the current unbelievable need. And you know, we activated this, got it going, you know, so with our dollars and our support, and hopefully it will make its difference. But wrapping up, food for thought. Okay, let's just say it, you know, we think we've made the case that women-led angel and venture-backed companies deserve more capital at higher valuations. We've made progress in the angel market, with room for improvement. You know, only 30% are women who are getting capital. 42% of all businesses are in the United States are owned by women. So we need improvement. The 154 billion last year venture capital market will want to examine how they might further propel innovation in the US economy by backing a much greater share of the worthy women entrepreneurs. You know, I think we see the data, and we see the opportunity. You see the opportunity.
Can I
Um,
ask a question?
yes,
So to me, it's outrageous that only 14% of the venture dollars are going to women-owned companies. But a question is, are women being turned down a lot more? I mean, if you, is there
Yeah.
room, are there many other companies out
Yeah.
there that merit and should or
Okay.
could get the capital?
Yeah, so what we saw earlier is in the angel market, only 1/3 of all applications are from women. So,
Okay.
men are applying 2/3 of
Versus
all
1/3, okay.
applications are men, 1/3 are women.
So we should
Um,
expect 33% then, rather than the 14%.
Well, that they apply, and this is the angel market. The 14% was the venture capital market.
Oh,
So,
okay.
so 1/3 of all applicants are women, and the of all applicants, so 210,000 applied, and 64,500 got funded. So 30% of the 210 got funded.
Okay.
Women applied, they represented 1/3, and the yield rate for women was 28% in the angel market. It was 32% for men. So the men are ahead and they applied more. In the venture capital market, again, only 5% of women are on the investment committees, and 2.2% of all VC dollars went to women. It's unbelievable. I don't have, nor do they report statistics about how many women applied and got turned down.
So one of the other things, I think, Kathryn, you've seen we're trying to start an initiative of getting more women on the Russell 3000 boards. Are women who've been on venture boards or good candidates, would you think, to go on boards of public companies?
Yeah, I've been on both private and public boards. Public boards require, certain additional training because of SEC rules. But as a general matter, absolutely, women who have been on venture-backed boards would be definitely candidates for a Russell 3000 public board.
Can I
And
ask one other question before monopolizing?
of course,
So I know you have golden seeds, and maybe just answer for that. For a woman to be able to participate and feel like a full-fledged participant, how much money do they need to be able to plan to spend each year?
at Golden Seeds, we ask our members to invest 25,000 a year, and the minimum per deal is 12,500. So we want women to have, or our investors, because we have men in our membership as well. We want them to build a diverse portfolio. So it's 12,500 a deal. We'd like our investors to plan to invest 25,000 a year.
And is that about what most of them do, or do you have some that are putting in hundreds of thousands?
We do have some whales. Yes,
Whales.
we do. Yeah, we do have some whales. Yeah. Our membership, the 325 people, is comprised of people with some very successful business backgrounds. I don't know how many are coming out of Wall Street, but more out of Wall Street as a group than any other. We have people from technology, from healthcare. We're really blessed. We have a really deep bench, fabulous people who can figure out some really, difficult to understand readily type of concepts. Yeah.
Thanks. Sorry.
And everybody has an opportunity, and we'd like people also to participate in due diligence on at least one deal a year, because, you know, we're benefiting from, as I said earlier, we did 21 new companies and another 20 follow-ons, so like 41 deals. It's a heavy lift. And so it also allows you to, you know, appreciate the opportunity that you would not be able to do on your own. So, you know, having some of your colleagues, you know, peel the onion, look under the cover helps. And then you make your own decision. You know, you may feel, hey, you know what, they missed this, they missed that. I'm going to look into this. I'm going to ask that, which is fine. And that's all open. And there are plenty of opportunities to do that. But we'd like everybody to participate. So if you, as an investor, are benefiting from the work that somebody else did, well, let them also benefit from your expertise. You know, it takes a village.
So one last question. So for those of us who are in Florida, now that there's Zoom, are we able to participate fully without having to fly to New York or Boston or California for the pitches and everything?
Yeah, and in fact, it's the pandemic has been very bad in all the ways that we know, and many of us have experienced firsthand. And it's also changed some things for the better. And we are a national organization. You know, we saw where we have the big dot and the little dot. We're in 8 states. And we've always felt like, geez, we have 325. The year prior, we had 280 or something. You know, we have a great group of people, but, you know, the members tended to be, oh, you're a New York member, so you do New York deals. You're a Boston, so you do the Boston. It's, you know, you didn't have as much cross fertilization, which we had all often said. You can do that because most of our work was by phone anyway, and now it's shifted further to Zoom. That we offered, and I know Silicon Valley did too, largely because of distance between San Fran and Silicon Valley, geographical distance. A virtual forum, presentations by the entrepreneurs, and an in-person. So for the same roster of companies that were presenting. And Silicon Valley was mostly virtual. Now everybody is virtual. And we have meetings that the Boston team will diligence, you know, companies that apply to Boston. We do it by geography, companies that apply to New York, and companies that apply to Silicon Valley. I just personally invested in a Silicon Valley deal. You know, I didn't meet the entrepreneur, but I don't have to meet the entrepreneur. You know, I met the entrepreneur over Zoom, and I know my colleagues who were on the deal team, and I read all the material. So it is the way that the process is being run today. And I think there's maybe no better illustration of the success of that than the fact that we invested twice last year, 2021, than we did in 2020. And 2020, the first pandemic year, we invested the same amount as 2019, which I thought was astonishing. You know, you would think that everybody would be, you know, like husbanding any resources that they had, but people were investing. So the pace is good. And I think people are appreciating that they can, you know, sign into any forums, Silicon Valley, Boston, or New York, monthly presentation. And then you open the aperture to even more selection, you know.
Super. Well, I see Beth had to leave us, so let me see. Does anyone else have any questions for Kathryn? Well, this was a terrific presentation, and I'm glad we recorded it so I can get to see the beginning of it. Beth asked me to thank you and to send her your slides and the information on the blood reuse company so that
Yes.
they can distribute that.
Okay, perfect. I'm
And,
happy to do that. Yeah,
and thank you. And I hear you're having a dine around for those of us.
I
who
am.
can come.
March 30th.
March
Yes.
30th. Well, I am looking forward to it. So
Excellent.
hope some of the other ones of you are going to be there. It's going to be, you're in St. Petersburg, right?
Yes, yes.
Perfect. Well,
Yeah,
thank you
right
for doing-
downtown. So as we said on the invitation, if you can come a little earlier, you know what St. Pete has to offer.
It has gotten
Yes.
so cool.
I know. Mary said that she's going to the new Museum of Arts and Crafts tomorrow. And Beth was just here yesterday. Unfortunately, I was on another Economic Club of New York meeting all day, so I couldn't see her. But yeah, we have those great museums and, you know, good shopping. I know there's good shopping everywhere, but we all like little shopping.
Exceptional presentation, Kathryn. Just
Thank you,
awesome.
Kathryn.
So educational.
Oh,
Really
good.
was
Well,
Very
really good.
impactful. Very impactful, the work.
Hi, Mercedes.
Hi,
Oh.
I was watching, listening, and also very impressed. I look forward to you sending the slides and
absolutely.
looking deeper into it.
Yeah.
How much time does it take? That's been my hesitation. I mean, I'm really anxious to do it, and then I'm just so busy. And
Well, I mean, I think it's flexible. It depends on you. You know, you have a full year of opportunities. The annual fund that we created for the first time and we closed in January, the minimum commitment was $15,000. And they will invest in 10 companies. And they will do that in 12 to 15 months. So you don't have to, you know, you can look at a company, it's going to be by vote. So there will be a little team that will recommend something, and then the investors who opted into that fund will vote, and an investment will be made or not, depending on the level of support. But it's a way to be involved and to pace your involvement. So the fund may invest in company ABC, which you find really interesting. So you may want to look into that one. But then if you don't have time to look into the others, your capital can still get to work. Now, of course, it's going to be, you know, smaller dollars. I mean, you can invest more than 15,000, but 15,000 was the minimum. So, you know, your capital can get to work on other situations that you don't have time to look into more deeply. But if you're intrigued by something, you can look into it more deeply and make your own investment, you know, in addition to, you know, the small investment that you would get in that company through the fund, and we're calling it an annual fund. You know, it's
So
a different kind of.
Kathryn, does Golden Seeds negotiate the return on investment that they're expecting with a deadline to be out? So already up front, those that you're investing in, they know what to expect?
Yeah, so what Golden Seeds and other angels negotiate is that valuation when you make the investment. We are investing equity, and equity, unlike debt, does not have a, you know, termination. There is in some transactions a redemption clause, to your point, to your question, and that redemption clause generally is in 5 or 7 years, the company will redeem this preferred stock at you know, at the amount of capital invested plus a dividend. But in most deals today, you don't find the redemption clause. And as the company raises additional capital, which most companies need to do to fund their growth, that 5 to 7 years is pushed out. So, you know, like if they're still, so it's the entrepreneur knows that if she's taking outside investment, her investors are looking for some great returns.
Mhm.
Generally, most angels will invest believing that there is a potential to make 10 times their money.
Okay,
And so they have to believe that there is a really high growth potential, that what's being presented to them is special.
wow, thanks.
Yeah.
Very great, informative.
Great. And so
Well,
if we
thanks so much, ladies, for
get a big enough
participating.
local group with you in St. Petersburg, then we can become a big dot, right?
That's right. That's right. That's right.
We'll just have to work
Yes,
on that.
we can grow our dot. Yes.
We can grow our dot.
Yes.
Well, thank
Yes.
you so much. This was really great. We all
Oh, thank you
appreciate it.
for participating. I appreciate you asked great questions, and I hope I didn't go too fast and give you too many new concepts that I didn't explain. I don't like to get too much into the weeds, but I wanted to give you an overview.
How long have you
Um,
been doing this, Kathryn?
I joined Golden Seeds in 2010. So coming up on 12 years. Yeah, and it's been great. I work with a great group of partners in the fund where I'm a managing partner, and then I work with the leadership around the country as well. So, and
So I'm
as I
just
said,
trying
I
to
teach
understand-
due diligence. Sorry.
I'm trying to understand because this is new to me.
Yeah.
So you're a partner,
Mhm.
and do you invest your own capital, or you raise funds through groups of people like us?
All right. So when I'm a partner, we raise funds from third parties and we invest on their behalf. And I also invest my own capital. So I do both.
I see. Okay.
And my partners do as well.
So if I may ask,
Mhm.
and this is personal, you don't need to answer, but in the 12 years that you've invested your own capital,
Mhm.
how have returns been for you?
So far I've made about 2 times my money, and I still have a number of investments that are going forward and have very nice prospects.
So not 10 times.
No, overall. So and I should explain. The angel market and the VC market, about 50% of the companies don't make it. And another 25% return some, but not all of the capital. So it's about 10% of your total investments will give you all of your return. You need a portfolio. So if we could pick a Facebook, because we had the Midas touch, great. But the reality is that doesn't happen.
So about 90% of the investment you're not going to get back. Is that what you're saying?
No, 50%. And then another 25, you don't get 100% back. And, then you'll get maybe just your capital back on another 15%. And then you get the 10 times on, that remaining 10%. So
Right.
that's what, it's a portfolio effect.
Yeah. Okay.
It's a portfolio effect. So, it depends on how long it took you to get a return, but we think of it in terms of both what has exited and what is yet to be exited. And I mentioned a couple of companies that just raised, additional funding rounds. These Lark, Middle East, Owl, so they're yet to exit, but people who are in those deals would be pretty happy right now. So the prospect of a nice exit.
So in many ways, if you are less able to lose money, you're better off investing in your fund where you have a portfolio. Because you can't
Or you
quickly
build
get
your own portfolio, or you build your own, it
But it
depends
would
on
take a
how much
while.
you want to, put into that asset class. But, so somebody can manage it for you, just like in public markets, we all have, funds that we're in instead of, stock picking
Right.
everything. Maybe you have a blend, you pick some and you have funds that pick others. But when you're in a fund, yes, then you have the portfolio. And the annual fund is another way to do that.
Well, that's what I was thinking.
That might be interesting.
Right, that the annual fund gives you the exposure. It's
Yeah.
like a mutual fund in that sense.
Yes, right,
Um,
right. Yes. So, and, as I said, about a third of our members opted in. So it was pretty popular.
Other questions? So we probably have kept you way over time, so thank you for.
Well, we got started late too. I
Oh,
think
okay.
we didn't start the clock until about 5:15, I think.
Oh, good. Then I
Yeah.
missed so much. Mary, do you have anything?
I'm just so fascinated by this whole angle, and venture capital concerns me because it is very results oriented and very male dominated. And so you were asking, Lucy, about venture capital, people being on boards funded by VCs, being good board people. I think yes, but there's so few women on those boards.
Right.
So that's the rub. And when I look at the publicly owned companies, that's maybe 3,500 companies.
Mhm.
And you look at the VC funded companies, and now you're talking tens of thousands.
Right, but I'm just thinking it's another pool of women. As we're talking about our initiative to get more women on the public companies, we were talking to one woman who serves on several boards and does a lot of governance work. And she says, well, they mostly want someone who's, in the C-suite. And, the numbers of women who are available is small. And so I'm looking for opportunities for other pools of women.
Yes.
that one could push to work to go onto those boards.
Well, I guess I would say that the pool of women in the C-suite far exceeds the seats we should be taking. I don't think it's a problem of
No.
supply. I think that they don't know where to look, and they're reluctant to take
Yeah.
on women who don't look,
Right.
don't have a
Right.
fit. And so I think
Right.
that's the real rub. And here we're seeing the women discount, right? Even though you outperform, we're still
Mhm.
giving you the discount in terms of your
Mhm.
investment opportunities. So
Right.
I think women taking charge of their money and supporting women is
Yeah.
it's
It's
a
outrageous.
solution, and I applaud it, and I think we should do more of it.
Mhm.
So.
Yeah.
All right. Well, thank you so much.
We do
And,
too. Yep. You're
Thank
welcome.
you all.
Really
Great.
appreciate it. Good to see you all.
Okay. Wonderful
you.
to have all of you, and have a
Take
good
care.
rest of your evening.
You too.
Thank you, Kathryn.
Okay.
Abrazos.
Bye.
Okay. Abrazos. Yeah.